A very good afternoon. Let's get into your markets now. Asian markets traded higher, unlike US stocks on the previous day. Sentiment was lifted in the region on optimism regarding fruitful talks between Japan and the US on trade. This helped to buoy the Nikkei. However, the words of caution coming from the US Federal Reserve Chair, Jerome Powell, about the possible impacts of a trade war between the two largest economies affected positive sentiment. The Nikkei share average ended the session up 1.35%. The Hang Seng Index rose by 1.61%, while the Shanghai Composite Index gained 0.13%. Weighed down by persistent tariff concerns and heightened fears of a global trade war and potential recession. Tech stocks fell particularly hard, driven by significant falls in the Nvidia stock, down over 9%, after they announced that they were going to incur a $5.5 billion charge after the US restricted their exports to AI processors tailored for China. Meanwhile, US Fed Chair Jerome Powell warned that higher tariffs risk slowing growth and rising prices, echoing what the Reserve Bank had to say earlier in the week. The Dow Jones Industrial Average declined by 1.73%. The S&P 500 edged down 2.24%, while the Nasdaq Composite Index dropped by 3.07%. All right, looking at the local indicators, the all-share index is down 0.5% at 89,264 index points. The rand is slightly firmer, stable maybe, at 18.87 against the US dollar, 21.45 vis-a-vis the euro, and 24.96 against the British pound. Gold is trading at $3,330 an ounce, platinum at $959 an ounce, while Brent crude oil is at $66.41 a barrel. All right, we are going to go for a quick break before we get into conversation with our analyst. All right, thanks very much for joining us. Of course, we are about to get into conversation with Mohammed Wagli. He's a portfolio manager at Sasfin Wealth, and of course, a lot going on the markets. He of course, is going to be speaking to us about a number of issues, including the issue of the trade wars between the United States and China, comments that came out from the Fed Reserve Chairman, Jerome Powell, and I understand we can get on with that conversation with him. Thank you very much, Mohammed, for joining us. So this trade war business is getting very messy. China is no longer ordering Boeing aircraft. It's halted the export of key rare earth minerals to the United States, and it's no longer buying soybeans from US farmers, among other things. And in the meantime, the US has started its trade talks with Japan. Your reading of all of this and how it's filtering through into the market?
Yeah, so I think it's fair to say that there's been quite a big escalation. Just to give a bit of background, the US did start by slapping tariffs on them as high as 145%. The Chinese then retaliated with 125% tariff on American goods. And then on top of that, obviously, the US has also banned the export of high-tech products like AI chips and things like that to China. Now, all of this back and forth, needless to say, is disrupting global trade massively. Those big tech companies and some manufacturers companies, I think, are feeling it a little bit more acutely than others, but it's even hitting sort of the soybeans and things like that, like you mentioned a little bit earlier. But we are seeing some businesses even halting shipments and things like that because it's just becoming too uncertain, sort of too expensive to trade. This in turn is then causing quite a bit of uncertainty in markets, and what we're seeing there from investors is they're rushing really to safe havens. And the first one that you think of when anyone says safe havens is gold, safe as gold. And, that the gold has just been performing phenomenally well since then. We're sitting at $3,300 an ounce, which is at all-time highs, and in terms of the impact that has had on markets, those gold shares, of which there's quite a few on the South African market, have been propping up our market. We've seen Harmony Gold and Anglo Gold benefiting quite a bit, both of those up over 100% this year. And then, contrast that with what's happened on American markets. They've taken quite a big knock, the S&P 500 giving up close to 10% year to date, Dow Jones probably around 7%, and then the Nasdaq even bigger, about 15% just year to date. So there's been quite a big effect here. They say, America sneezes and then the rest of the world catches a cold, and we are seeing that to quite a large extent now.
Yeah, indeed. And so US Fed Chairman Jerome Powell, he pretty much has warned what the Reserve Bank signaled earlier in the week, that the specter of higher tariffs, especially between the US and China, will likely result in stagflation. Why is this such a highly undesirable situation?
And I think, Nompu, if I can say, you were quite on the nose with this. I think I was on about a month ago, and we had spoken about the threat of stagflation and why, that is such an undesirable situation. But just to recap that ever so slightly, it's a situation in where inflation stays really high, but on the other hand, economic growth slows and then unemployment rises. Now, why this is sort of a specifically challenging situation is because usually what the Reserve Bank, central banks would do to combat this is to rise interest rates, but that doesn't give you the outcome you're looking for in a period of stagflation. So it's very much a double whammy. It makes things very tough both for households and businesses, and really this comes off the back of, I suppose greater concern here comes off the back of Powell saying the outlook is really uncertain. I think the exact phrase he used was highly uncertain. So it looks like for now the US Central Bank, the Federal Reserve, isn't going to be looking to cut or hike interest rates for that matter anytime soon. They're going to be very cautious. They're going to be sort of waiting and watching to see how things unfold. I think the market was looking for a bit of reassurance. That's not what we got. We got a message of sort of caution, and I think the American market at least didn't like that at all, and I think that's why we saw a substantial drop yesterday as well.
Yeah. Mohammed, one last thing as we're running out of time now, but I see that the crude oil price has ticked up slightly, still well below the $70 a barrel mark. But what are the drivers behind that currently?
Yeah, it's an interesting one. I think, oil, I would say, in a bit of an awkward space. So what we're seeing just in terms of, the slight price rise just yesterday was the US had imposed sanctions on Iran. Specifically, they had targeted a refinery that supplies China, for obvious reasons there. And then at the same time, OPEC Plus is trying to manage output by cutting how much oil they produce, So those two factors in turn are pushing up those prices, but I think that's very much a short-term play, especially when you consider that, the whole trade war between the US and China and pretty much everybody else is dragging down global demand. What happens, and I think this is relatively intuitive, big economies slow down, they use less oil, so even though the supply issues are pushing the oil prices up, weaker demand is actually pulling in the opposite direction. So we're going to see quite a bit of volatility there. So that's definitely one to watch. All
right, Mohammed, we're going to leave it there, but thank you very much for your insights as always. Mohammed Waghli, he's a portfolio manager at Sasfin Wealth. National Treasury has issued a statement saying Finance Minister Enoch Godongwana will not be making any further comments around the planned VAT increase of 0.5 percentage points set to take effect on the 1st of May. This is in light of an urgent court application that was filed by the Democratic Alliance to prevent a VAT increase from taking place. In a responding affidavit in relation to the case, Godongwana has rejected the DA's move to prevent the VAT increase from going ahead, adding that Section 7 subsection 4 of the VAT Act empowers him to temporarily adjust the VAT rate for 12 months from the effective date. Parliament can then approve or reject the proposal within 12 months of his announcement of the VAT increase. It's a race against time, as the DA's case will only be heard in court on Tuesday, the 22nd of April, just over a week before the tax is set to be increased.